let me welcome Barry Eggers. He is a founding partner of Lightspeed. He is the early lead investor in a long string of successes there. And he is known for his focus on enterprise IT structure, data-driven platforms and analytics, healthcare and genomics, and deep tech and cloud-native software. He has been a key part in a number of major transitions in the industry over the last 10 years. And so I'm delighted to welcome Barry. Thank you so much for coming.
Hello. Hey, look at those areas of focus, and I feel old. Right? None of AI. I'm sorry we're going to miss the discussion on liquidity and exits because that's sort of the most important thing. But I'll try to make do with that. So, what do you guys want to talk about, Chris?
Well, I think that the most interesting topic for this crew is really the question: what do you look for? What are the things that really make your ears perk up when you hear from a startup founder who wants to, of course, get you interested, get you involved in what they're doing? What do you hear that makes you disproportionately interested in hearing more from a startup founder, a startup pitch?
Yeah, and I'll try to answer that. I think if you ask 10 VCs this question, you'll probably get 15 different answers.
Yeah.
So, but the easiest thing is just put yourself in the other person's shoes, in the VC shoes that's listening to your pitch. What do they want to hear? For me, I have a bias. Certainly, I'm really interested in the people aspect. I want to know about the people, specifically why you're doing this. What is it? Why do you have the passion for doing this thing? Or do you just want to make money? I prefer having a passion for things versus making money because the money will come later. Is this a new market or an existing market? I prefer new markets. I prefer, sort of creating new markets and being the leader in that market versus going and trying to unseat someone because they're lazy or moving slowly. In venture, you make the most money when you back someone who becomes number one in a market, as long as it's a good market. You make a lot less money when they're the number two player, and you don't make much when they're the number three player. So, what's the market? How's it interesting? How are you going to become the leader? What drives you? The technology for me is less important in the beginning because companies just evolve their technology so much these days. I mean, it's just, almost seems like every quarter, every 6 months, the technology is evolving. So I don't get too much wrapped around the axle. I do want to understand how good the technology team is, though. Are they a best in class team? Are these guys capable of building something that no one else can build, or building something that, with a lead, they can hold a lead? So it's those kind of things we're listening to. I will introduce it to other VCs generally, and we'll collaborate and share feedback. And so we all have our different biases. So, it's that kind of a process, but it starts with people. I mean, it starts with great people, and it's not just about the resume. It's really about who you are, the intangibles. Are you a founder who is going to get through all the hard stuff? Are you persistent? Are you a self-starter? Are you a good leader? Do you want to build a team? Are you a micromanager? I don't like working with founders that are micromanagers. I like working with founders that hire great people and let them do their thing. Are you a kind of founder that, needs a lot of help? The problem with, that is when I first started in VC 28 years ago, I always wanted to back companies that needed my help. It turns out that's a negative. So I actually like CEOs that really don't need my help. So anyway, those are just some things of my bias over the years. But good ideas good ideas are pretty easy to spot, and people spot them. I you know, you have to get early to the market, though. That's really the key thing. If you're coming to a market and saying, well, there's already three players and we're going to be better because, that's really a hard pitch.
Yeah. So what have you seen change most over those 28 years in the approach that VCs take on funding startups, early stage?
Well, I mean, uh, a lot has changed over 28 years. Even in the last 15, I think, we would do multi-stage, so we'd want to come in as early as possible and then back the company all the way through. And we still want to do that, but now you have a number of firms that are just seed firms or pre-seed firms coming in. And so it does, and if we're coming in to look at a deal and you already have a seed or pre-seed investor, it doesn't matter who it is, right? It's a signal to us, much like we provide a signal to everybody else when we invest. They provide a signal to us. Want to know who they are? They're probably on the board. What kind of quality they are, and so that all matters. And there's a lot of companies that are raising capital much faster. Some of the AI companies are raising higher valuations, faster pace. I don't totally love it, but that's sort of what the market is. You're always fundraising. Rounds can happen 3 months after another round because, some VCs get FOMO and they want to get in the deal. And if you can create that, that's awesome. Remember, VCs are driven by fear and greed, which is the same as scarcity and FOMO, right? So create that. But yeah, I mean, the market's changed quite a bit. We're syndicating, yes, less earlier with our peers than we used to because there's less ownership available. We like to be 15 to 20% when we start early. For the expansion rounds, where I think we're syndicating more, some of these companies that require large amounts of capital, you're seeing a large syndicate of players writing large checks. So if you can get to that, that's great. But it's a very different market than it used to be.
Yeah. You've been comparatively busy over time in deep tech and semiconductor startups compared to many firms that are more completely software oriented. What do you think are the important opportunities or challenges in the deeper tech and in semiconductors right now?
Yeah, I mean, I think I'm a glutton for punishment, frankly.
Yeah.
Working with semiconductor companies, I love semiconductor companies. We need more of them in the United States for sure. Um, the biggest challenge with semiconductor companies and why they've gone out of favor. And if you look at the funding from VCs for semis, I think you're all familiar with it. When I started in VC in the late 90s, 9% of all VC capital went into semiconductor companies. 9%. Today it's about 1.2%. And venture has grown 20x since then. So it's probably gone up slightly, the amount of dollars, but as a share of venture, it's way down. Why? Well, one, we all know capital intensity, right? It takes a lot of money before we know what the answer is. Number two, it's a high technology risk type of situation. Number three, we're now in a situation with semis where there's a lot of powerful companies. And so the white spaces are less clear. Now, AI is a nice, exciting white space because the whole data center changes. So, it's been hard, and there's very few people that really know how to do it. The problem is too, you have a lot of young VCs that have never done semis. And so, if you are a semi company and you're looking to raise capital, don't raise from a VC who's never done semis. They won't know what to do. Working with a semiconductor company is very different than any other thing we've done, right? It's a very different process, and you got to have patience. And, there's some really important rounds that you have to raise before taping out that are really hard to raise. So you want to have people that know what they're doing and are well connected to the ecosystem. Having said that, I was doing some work with the government recently, and I feel like there's some good tailwinds for semi companies, and AI is one of those tailwinds because, say, the data center changes. It's very different than it used to be now. We're not putting CPUs in data centers and building it out like we have for the last 20 years. We're putting GPUs in, and the whole thing changes. We're going to use more optics. We're going to have different networking, and we're going to move the data around differently.
Yeah. So how long do you think the current AI hype cycle in its current form runs? I mean, if you go up to 40,000 feet and you look at what's going on in the venture world, it's been so AI dominated for several years that you got to assume that something changes at some point, that either there's a
I mean,
backlash or it evolves into something new. What's your prognostication about the
well, I mean,
venture
if I had
AI?
that magic answer, I'm not sure I would tell anyone, but let me guess. If y'all seen the Gartner sort of hype cycle chart,
Yeah, yeah,
I still think we're in the first up of the roller coaster, right? I think we're close to the top of the up of the roller coaster, and then we're going to go down, and we're going to get into the trough of disillusionment. I don't know how long that will take, but we'll get there, and then we'll start getting out of that when we see, the value, the real value that these companies are producing and productivity gains that they're producing for their customers. And it may be really very quick, but we will go through that cycle. It happens.
yeah, right.
But I still think we're possibly we're on the down slope of the first big up, right, as a roller coaster, and we're starting to gain some speed. So
Yeah, there's certainly plenty of talk. A significant group of doubters that are sort of the AI build out is a bubble crowd, who are trying to do the arithmetic on how you get a return on $500 billion worth of new data center, or $1 trillion worth of new data center. Um,
yeah, I mean, I've lived through bubbles that popped. I mean, the telecom bubble that we had in late '90s and the internet eyeballs bubble. Um, but I think it's dangerous to when you say bubble about AI, to think about it as something that's not going to create massive markets. It will create massive markets.
yeah,
It's
right.
it's a bubble in the sense that the amount of funding going into it is accelerated beyond what anyone expected. Um, but I'm expecting real outcomes here. I'm expecting these companies, there's going to be some companies that fail. There'll be some craters. There always is when you have this level of funding, but there's going to be the next generation of the Fortune, 100, I think, is going to be created during these next 5 to 10 years. So, I'm a believer in this trend. You look at the biggest technological trends in the last 200 years, this has got to be at or near the top of the list,
Uh-huh.
right?
Yeah, it is quite something.
It's to me, it's potentially even, the internet was obviously a very big trend in our lifetimes, but this could be bigger.
Yeah, yeah, yeah. I personally don't
As an
know if it's,
entrepreneur, I envy you. You are in the right place at the right time, for God's
yeah, a
sakes.
lot of money is
So
going to
I
be
know it's
made.
hard and you're going to get gray hair and it's the hardest job in the valley, but man, your timing is impeccable.
I got one more question, and then I really want to open it up and get people to raise their hands, or you can type questions into chat, and I'll forward them along. Um, if you were a startup leader checking references on VCs, what are the key questions that you would ask
Yeah.
someone
Yeah. First
about?
of all, it's important that you do that. That they're going to check references on you. You should check references on them. Especially in early stage VCs. If your company is successful, they're going to be with you for 10+ years, and that's longer than a lot of marriages, right? So make sure that this is someone that you're going to be able to work with. So what do you want to know? First of all, you want to know that they have the experience level, right, to really be a thought partner with you. Not that you have to use them as a thought partner, but you want to be able to use them at the right time as a thought partner. So what have they done in the past? Have they invested in this stage before? Have they invested in similar types of companies? Right. Find out who those companies are and talk to the CEOs, by the way, of those companies to just see what the experience was. The other thing is just personality and chemistry, right? You want someone that you're going to be able to have good discussions with, give and take. You're coming from different perspectives. Maybe that person should be a good listener, right? Especially when you need it. So it's all that chemistry and personality makeup. If you hate your VC, you're screwed because they're not going away unless you can find a way to get them fired, and that's really hard. So pick people that you want to be partners with, that you want to team with. That's probably more important than anything.
Yeah.
Make sure they're honest people too, by the way. And that's why you want to call other CEOs they've worked with to find out what the experience is. There's always bad. VCs always misbehave at some point. So figure out what that looks like.
Yeah. Great. Thank you. So do we get some questions here? Some hands raised, perhaps? Let me make sure I can see the.
Ask me the hard questions.
Or just speak up.
Maybe I'll take a first spot. Fine, Chris. I had put it in the chat as well. Use of funds is a very critical question that comes up in the raises, and sometimes there's a mismatch between what the founder has in mind and what the VCs are looking for them to be, really pitching. How do you any thoughts on how to navigate the disconnect between the founder's use of funds model versus the VC's expectations?
Yeah, Ollie, give me an example of that.
Typically, it's around growing. I've seen it where trying to grow a marketing team or add a marketing person on full time, as well as salespeople. And then I've had it where the VCs want more of the fundamental technology and want more R&D, and keep the sales and marketing all on the CEO or the original founders.
Yeah, and I would say that if your VCs are getting into the weeds on like a specific hire here or there, that's probably too much. You got to get them out of the weeds. Having said that, if the discussion is about, is our product, strong enough that we should prioritize getting customers to use it, and test it and try it, versus we need to keep building more features that differentiate us. That's a strategic question. And I think that's one where the CEO really has to drive it, right? You have a sense for, are you winning in the field? Do you have a better product or not? But I would say as a VC, I have a bias towards spending development dollars and continuing to extend product leadership versus marketing dollars. I don't love spending marketing dollars. I like spending money on engineering and sales. Sales, once you have product market fit.
Ich habe hier gerade noch diesen.
What's that?
So I think that was somebody else's audio that kicked in.
Oh, sorry.
I'll chime in on that as well. I think, especially among technical founders, there is a degree of magical thinking about marketing dollars, that somehow I hire a marketing person or I do some advertising and people will just suddenly discover my business and will come flocking in large numbers. And that's all I needed to break through. Sometimes the VCs have more experience about the fact that, marketing dollars are not magical, that getting the right product first is really important. And sometimes a gentle reminder to the CEO that you got to keep working on the differentiation and working with specific customers before you can invoke the magic of marketing is a good reminder.
In my experience, when a company is not hitting their plan, not growing as fast as they want to, top line, it's usually product related, not marketing related. Right? It usually means we need to do things to make our product better. So that's my bias. Now, the place that I'll leave the place you will have disagreement between investors and management is the pace at which you spend your funds, the burn rate, right? And that VCs, if you're not hitting your growth numbers, VCs will start to say, maybe we ought to slow down our spending. And it could translate into, doing a reduction in headcount. So, that's something to sort of, and I think it's important not to get too far ahead of your skis on the spending, because it's really painful to do a headcount reduction in any company. I hate it as a VC, but sometimes you have to do it if you're overspending.
Very good feedback. Thanks a lot, Barry. Thanks, Chris.
David asked the question, how can we effectively persuade a VC to embrace our view of market trends when it differs from their current investment thesis?
What's that? Sorry, one more time.
So how do you persuade a VC to shift their view of market trends when it differs from their current investment thesis?
Yeah, persuade VCs. You don't see those two words in the same sentence very often.
Are you saying that VCs are in the category of often in error, never in doubt?
Yes. Sometimes we have opinions that we don't want to change. I think that the most important thing is just show market data, right? Bring them market data, customer data. The answer to everything you're doing as a CEO lies with the customers, right? I mean, it just does. And if you have great people and you have the right customers, just got to bring that to a VC. Having said that, you can't, the VC should not be driving your strategy. You're the CEO. If you're the CEO, you need to be driving the company. You're in charge, not the VC, right? We're investors. We get to sit on a board. We get to provide feedback. We get to hire and fire you, but that's sort of a nuclear option, right? You're running the company, run the company. Make sure that you establish that relationship with your VCs, that you're running the company, not them.
I've got a very, very specific question here. Alfred Garcia asks, are you currently evaluating AI tech companies, and can I get on your list?
Hi, Alfred. I'm not doing new investments anymore. I've been winding down for a few years. So, but I know at Lightspeed, we're doing lots of them. We're, I think, one of the largest investors in Anthropic. Got a bunch of robotics. We're in a bunch of the AI companies. So yes, if you have a pitch you'd like us to look at, I will make sure the right person sees it at Lightspeed. Just send it to me at eggers@lsvp.com. Thank you.
Thank you, Barry.
Thanks, Barry.
Alfred also asked, what's the filter criteria you've seen VCs use for selecting who they should even speak to? The classic tactical question of how do I even get half an eyeball on my idea?
Yeah, I mean, this is the $1 million question, right? Is how do you get people to take a meeting? The most obvious answer that you never really see is just get your business to a place where it looks great, and VCs will take a meeting, guarantee you. The second obvious, not so obvious question is getting an introduction to a VC, and we've all sort of said, you've heard that a number of times. It's hard. Sometimes you start with, an associate calls you, and you're, should you take the meeting with the associate? And I would say that's a hard one. If you feel like you have a good chance of getting past the associate, yeah, sure, take the meeting. But ask them to set up a meeting with the partner, or ask before, hey, if this goes well, who am I going to meet with? Understand their process, because associates are out there kicking tires. That's their job. They're supposed to look at 100 deals and recommend 5. So you don't want to be part of the 95, right? So ask the questions before your meetings with these folks. You know, send. I would ping the partners that are sitting on boards. The deal doing partners. I would start with them and be persistent in trying to get a meeting with them, especially if your business, is got some really positive trends to it.
Yeah,
But
great.
once you start with an associate, sometimes it stays with the associate level.
Yeah.
Thank
Marco, you've got a question pending. You've had your hand up for a while. Go ahead, Marco.
Yeah, no problem. Thank you. Barry, thanks a lot for the discussion. You just mentioned that the first thing you're looking is the team, the person you have in front of you. But that raises a key question for me, because sometimes people tell us, oh, you have to show you have a bulletproof team, and you have a bulletproof market, and so on. But the crude reality, that is not real. I mean, most of the time, you know your weaknesses. I mean, what they're doing in front of VC, what is better, just to show that you are aware of your weaknesses, and then you ask for that, for help, or it's just better to boast of. I mean, it's like like dating. If you're just dating the best girl in the village, maybe you want to boast off at the very beginning, but for a long relationship, you have to be honest.
Yeah, I mean,
what do you suggest?
This is when you're pitching and you don't have a complete team.
Yeah,
just say it. I mean, most of the time when we're investing early, there's not a complete team. There might be a technical founder and a business guy, right? And a dog. There's not a complete team. And you might say, well, hey, here's why we're the right founding team. And here's what we're going to do in terms of building out the team behind us over the next 12 months. That's why we need your money, right? And we've done it before at wherever we were at before. We built great teams. We're going to do it again. One thing you don't want to do with VCs, well, certainly with me, is to say things you can't back up.
yeah,
right? Or boast about things that are not true, or make statements that aren't true. But I think humility is a great, sort of characteristic of a CEO. Humble. And by the way, if you're humble, you can be humble but aggressive, right? You can be humble but a driver. But if you're humble, I think your people are going to work hard for you. Your VCs are going to work hard for you. And that just shows that you're seeing what you need in your business. You're not the smartest guy in the room, right? Don't be that CEO. Those are really hard to work with. So humility is great, and showing it's not weakness. It's like, hey, I just know that this is what we're going to have to do. We don't have this yet. We're going to have to go get it. And this is my plan for going to get it. Does that make sense?
Yep. Certainly. But, again, as in dating, you have one opportunity to get the first impression.
Well, first impression for me, I want a transparent person, because if you're not transparent before I invest, you won't be transparent after I invest.
Sure. I agree. I mean, I totally agree on this, but I don't know if every VC is like I mean, yeah.
Well, not everyone sees like that. And you have VCs that want you to lie, you have CEOs that aren't transparent. You have VCs that aren't transparent. But if you're a transparent person, find an investment partner that is transparent too, that you can have those open discussions of. And when you tell them something bad has happened in the company, they're not going to kill you. Right? They're going to say, okay, that's unfortunate. What are we going to do about it? And they're not going to just freak out and, go into a spiral mode. This is part of having experience. In my early career, I would freak out. Now I understand that. Let's ask the question, what do we do about it?
Yeah. Okay. No, next point. Yeah. Thank you.
Ali asked the question, you mentioned AI infra as still white space for semis. What are the biggest untapped, undertapped segments within that space in your view?
Well, they're being tapped. I mean, there's no established leader yet. But what we do know, NVIDIA is NVIDIA, and all the big, large guys building models are probably going to have their own chips. But we do know that Broadcom doesn't fit perfectly into it, that networking is going to look different because the traffic flow is different. We know that we're probably going to need, as we scale these things, and they do get larger faster, we're going to need more optics. And so, how do we sort of put photonics into the fray and utilize very fast you know, connections. And so there's a whole bunch of stuff that's going to happen, right? There's also going to be, you know, as we get into new types of compute, right? Will quantum come along? I don't know, but you know, it's going to have an opportunity. There's all sorts of, you know, different compute technologies, optical, you know, photonic computing that are coming. What we do know is AI has an insatiable appetite for processing. And so how are we going to fulfill that? You know, energy is important. So energy efficient components are going to have their day in the sun. There's all sorts of stuff that's changed now because we're not building data centers like we did over the last 20 years.
Yeah. There's a related question from Darman around AI accelerators and hardware chips. Many companies are leveraging RISC-V to develop specialized hardware solutions tailored to specific AI ML models. Do you see this trend evolving, especially with startups like TensTorrent, Light Matter, and Cerebras leading in the space?
Yeah, I mean, there's different approaches, and the different platforms give you different pros and cons and benefits to each. At the end of the day, you know, what's going to matter in the data center? You know, certainly performance matters, cost matters, and electricity matters, right? And so depending on where you're at and what the platform gives you, there'll be multiple solutions. Having said that, going off and trying to compete with NVIDIA is a hard way to make a living. As a VC, I don't really feel great about, you know, building a company that's going to compete directly with NVIDIA. I'd rather actually figure out a way to be complementary to them or fit into some other part of the data center.
Yeah. What's going on that even NVIDIA would say, oh, I'd really like to leverage that capability as well.
Yeah, and they're in the center of the market, so they have better information than anybody. So, you know, if they're the kind of company you think they are, their roadmap is crazy in terms of the number of things they're doing.
Bo, you had a question.
Yeah, hi, Barry. I have a question. You know, right now AI is a very hot area, and maybe for startup, there's AI for the energy managers system, or AI for the industry control, or there's AI for the logic optimization. All of those projects has high potential, and but we don't know which one is in the all the future is unclear for each of them. So in this case, how do you evaluate or to decide which company you want invested in, and what kind of factor would you like give the most as the most evaluate?
Well, we're going to build a portfolio, and in some cases, we're going to have companies that compete with each other, especially if they have slightly different approaches. So this is not we're not in the, I don't like being in the business of picking companies. I like being in the business of picking trends and then having a bunch of companies that support that trend. Some may have some overlap, but we manage that internally. So, and we're investors in Anthropic, SSI, XAI, a little bit in OpenAI, small. And then there's a couple others, Thinking Machines, Mistral. So,
Okay.
you know.
Okay.
Yeah, I think that the key thing I observe is that, you know, we've got this whole new ecosystem, and almost everything that you knew from 5 or 10 years ago is being retooled. Every application, every piece of hardware in the data center, a lot of hardware elsewhere will be rethought in the light of AI, because from an end experience standpoint, it's becoming very important. And so that percolates back as a disruptive wave through all these different markets. And you have an opportunity to figure out, well, what's changing most in which direction is it changing? And is it changing now or in 3 years? And once you answer those questions, you'll get quite a list of opportunities. And then it's a question of figuring out, do you have a piece of technology that's going to solve that? Do you have some insights into that market that lets you get customers? But there is this wave of disruption that's happening. And the fact that some people are already making a ton of money at it shouldn't dissuade you from realizing that the ripples of that disruption will propagate for quite some time and into all corners of the technology space.
I mean, Bo, we're not, again, we're in the business of building portfolios out. And so think of it like a roulette game, is we can put our chips on as many numbers as we want. Now, if we put them on every number, our returns go way down. But so we try to, but we can put a lot of chips on a lot of numbers.
Yeah. Other questions here?
There was a question on AR VR market.
Yes. Yeah. Yusuf, what's your opinion on growth opportunities in AR VR market and AI solutions in that sector?
Yeah, I'm probably, the wrong demographic to ask that question to, but I do think that I'm not a VR guy. It's too immersive for me. I don't even like looking at my phone all the time, but I think there are applications in AR, industrial applications, even consumer applications. We'll see. I think the more interesting applications in AI are going to be around robotics, though. I think robotics has not gone through the hype cycle yet, and we're about to go through the robotics hype cycle pretty soon.
Yeah, I think that's
robotics.
That's right.
Robotics with an AI brain is pretty amazing.
Right. And as I think I've talked about, I think that you've got kind of a whole new level of visual reasoning, which is just at its infant stages, that goes along with this somewhat more mature cognitive reasoning about words and ideas. And when you bring those two together, it will be amazing. But we're way behind in terms of visual reasoning compared to where we are with the current Gen AI word-based reasoning. And so I think that alone, and then the combination, once you put it into a electromechanical autonomous structure, is going to be pretty remarkable.
I got a question on using early consulting revenue. Is that RJ? Early consulting revenue.
Yes.
To gain insight into customers with the goal of building a product. This is a semiconductor company, or is it software?
It's actually AI for biotech.
Okay. I think consulting revenue, I think getting early revenue with customers, right? And in learning how to engage with customers and get revenue is always a pretty good thing for a company to go through. What you don't want to do is make it how you operate full time, is that eventually you need to build a product that can serve a large set of customers. And sometimes when you work closely with one or two customers, you're customizing something, and you're probably going too far down the custom road than you would if you were serving a larger market. Having said that, it's good for companies to learn how to interface with their customers and serve them.
Yeah. For me, the metric is, if you're doing a series of kind of contracts or consulting gigs, is the percentage of the work reused from prior things increasing over time? That is, are you learning to the pattern? Are you building it into your underlying technology? Or does every engagement start with a fresh sheet of paper, and the only thing that's reused is the people? The learning process is a positive sign. The reuse of just the engineers without any cumulative knowledge and technology, not so good a sign.
And there will be investors that will tell you just focus on getting your main product out. Don't mess with this. Having said that, you have to run the company, and if you're not fully funded to the degree you would like to be, getting some early revenue with customers that allow you to, bridge that funding a bit and get to that first product is not a bad idea. As long as what Chris says, you're continuing to move closer and closer to that final product.
Well, we've reached the top of the hour, and so
That's really helpful.
Thank you. RJ, you wanted to make another comment?
Oh, no, sorry. I think I'm a little delayed because I'm in the car. I was just saying thank you. That was very helpful.
Yeah.
Okay.
Great.
I see there's one question that's just come in from Yaldis. Will you ask your question, Yaldis?
Yes. Thanks for taking the question, by the way. It's just a question and then a small question if relevant. The main one is about whether there's a big assumption or truth that you've changed your mind on as an investor now in the age of AI that you believed on since, I don't know, the last 20 or 10 years. Anything that has fundamentally changed now, looking back. And then a small question more specific to my use case, and that is just your opinions on maybe opportunities in the intersection of AI and chip design software, if it's relevant, obviously. Thank you.
I've changed my mind on a lot of assumptions over the years. In AI, one assumption we always make is you have to be the leader in the market to make a lot of money. And I think there will be some markets where the first and second, maybe even the third player have very good outcomes, but we will see, because these markets are so new, but they can be so large. It's almost like the database market when it first started, right? Stuff like that. So that's an assumption that I think will challenge. When it comes to building portfolios for venture portfolios, I think less may be more, but concentration may be more important than diversification. We don't need to get into that now, but the thing is, when you have a winner, put as much money into your winners. And so that also skews the funding world. 35% of all venture funding went to 10 companies. I don't know if any of the 10 are on this Zoom, but that means there's only 65 left for everybody else. And we're in that kind of a world. So you have to be cognizant of the MAG 10 or whatever they want to call it. Finally, your question on AI and chip design. I think chip design, EDA, is going to be disrupted by AI. And in fact, we're already seeing a number of startups at different parts of the process that are coming out and using AI to automate. You can bet that Cadence and Synopsys and those guys are all trying to do it too, but it is a natural disruption point, and there are people funding these companies.
Yep. It's great.
Thank you.
So Barry, thank you so much. Once again, great to have you here. Great to have your very open and helpful commentary on these questions, and I think all of us appreciate it.
Thanks, everybody.